Hello and welcome. You're watching Business Today. I am Sakshi Batra, and this is a show where we talk most about financial planning and your retirement planning, everything that deals with your personal finance. And today, again, we're going to be focusing on a very important topic, and that is the National Pension Scheme, to help us understand what this scheme is all about and what the latest debate on old scheme versus the new scheme is all about as well, and how should you then take the wise decision about investing in this retirement scheme. I have with me a very special guest joining in. Shweta Jain joins in. She's the founder of Investography. Shweta, welcome to Business Today, and thank you so much for taking the time out for us and for this discussion as well. Okay, Shweta, so let me just quickly start off by asking you the hottest point right now, and what most of the governments are right now debating is that whether the old pension scheme is better than the new pension scheme. We are already seeing recently Rajasthan and Chhattisgarh that they have restored the old pension scheme for the government employees for FY23. So why is that really happening? And what is the real difference between these two schemes for our broader audience, if you could help us understand?
Yeah, so it is the hottest topic right now. And I think it has been a point of contention for quite some time now. It's a point of worry for a lot of working class people, a lot of investors even. But the biggest difference that you have to understand between the old pension scheme and the new pension scheme is the certainty versus uncertainty. In the old pension scheme, you knew exactly how much pension you would get, and it was certain. In the new pension scheme, because it's dependent on market returns, it's not assured. So there is a sense of uncertainty that you don't know how much pension you will be able to withdraw when you retire. So that is the biggest difference, and that is the biggest point of contention between the two schemes.
Okay. Could you also help us understand what is the central government stance on this debate that is ongoing right now? Can we also see some changes coming in the national pension scheme because of this debate?
So the stance is quite clear. I think from the time NPS was introduced in 2004 under Atal Bihari ji, the BJP government does not want the burden to be on the government, because this requires huge fiscal resources. And it had been a big point of worry and would continue to do that for the primary reason that people tend to live longer now than they used to. So the lifespan has increased, and which is why the pension burden, so to speak, has increased as well. The pension scheme, the NPS, I have always said this to investors over the many years that I have been recommending it, of course, and I've been constantly telling them that it's an evolving product. There will be changes that will keep happening. There have been changes that have happened, and it will continue to happen. So they have to be cognizant of the fact that the product will get better, only better from here. And I think it's a great way to save for retirement. It's a great way to take responsibility. And of course, the longer duration that you have for retirement, with NPS giving you the option of equity, you have the option of increasing your returns even more than what a pension would have given you. But obviously, the difference is the certainty versus uncertainty, and that is huge.
Absolutely. Certainty versus uncertainty, that's the biggest point of contention. But otherwise, it is an evolving project. And just like how Shweta mentioned, she has been advising this product to all the investors who listen to her. Let's also talk about the private sector employees then. All of us who have been investing in NPS, now with this latest debate happening between the old and the new scheme, are there any shortcomings of NPS that all the investors of NPS must be aware of? Because only then we will be able to invest wisely.
I wouldn't say shortcomings, but I think one of the things is that it gives you a 60% lump sum when you retire. Now, while investors have this as an issue of saying only 60% is coming, I have seen investors that when they get the 60% lump sum also, the way they invest is not necessarily in their best interest even. So while they may think it as a negative, I think it's a great way that you get an annuity and you are able to buy a pension product so that your retirement is much more secure, rather than you taking that cash at that time and deciding where to invest. because I know a lot of people who invested in properties and, taken big risks, and those haven't worked out well. The pension has actually been the savior. The annuity that comes from the NPS has actually been a savior. So that way,
Absolutely.
it's a good thing, but of course, investors do see it as a negative. The other thing is, of course, that they may not be able to withdraw before they turn 60, and which again, they do not like that as a feature, because they feel that
long lock-in period.
Yeah, so they feel that there is a lock-in. Again, this is also a savior, and it's a great feature, especially for something like a retirement, because Indian parents, and I'm saying parents in a very general way here, tend to spend more on children's education and weddings than they do for their own retirement. So at the time, emotionally, they tend to take these decisions. And so this money, which was earlier saved for retirement, goes to something else, which they're, again, protecting yourself from yourself. So I think it's actually a good feature, but yeah, these features could be looked at as negative by investors.
Okay, so let's do a kind of a SWOT analysis of NPS now to help all our viewers understand all the pros and cons, the benefits, the weaknesses, the strengths and the weaknesses of NPS, and how it really scores over the other options that are available when you talk about retirement planning. So how would you really define each of these SWOT there?
So I think when I look at an NPS, I rate it quite on a higher platform rather than other products which are more open-ended, be it mutual funds, even insurance products, so to speak. Because I like the fact that these are low-cost products. I like the fact that you can take higher exposure in equity. The fact that there is a lock-in. So all of these kind of add up to the great features that NPS has. Mutual funds are more open-ended. And like I said, if you have this flexibility to withdraw, you would do this for some other causes. You have the flexibility to not save for certain amount of time, which NPS has. I think it could be more disciplined in nature, especially for private sector employees. So we do tend to invest in EPF. So I think an NPS would be a great addition. Lots of companies have introduced this feature, but investors haven't opted for it, which is why we educate investors on the features of NPS. That's a great thing. So I think a lot of good features to add, maybe tax-wise, if they give higher, tax benefits, people would get more motivated to sort of invest higher amounts and more regularly. So I think some features, definitely there is scope for improvement in this as well. But from a cost wise, from an options wise, even from a liquidity wise, I think it's a good product to have.
Okay, and what could be the threats or the weaknesses that you would want to highlight here for all the investors?
So the weakness, I would say, not necessarily a weakness, like I said, something to improve on is maybe the tax angle. And I would say if the withdrawal can be the annuity that you get on time, the withdrawal can be, say, tax-free, so to speak, it would compare higher against an insurance. So not just the investment amount that can definitely be increased. So like even under 80 CCD, that there is a 50,000 extra benefit.
Yeah.
Say 1.5 lakhs or 2 lakhs, I think that's a great push to your retirement corpus. And at the time of pension, if that is not taxed or up to a limit, it's not taxed, I think that's a great feature to add on as well.
Okay, so while we've come to know the little shortcomings or little weaknesses, but beyond that, there are many pluses that you've mentioned for NPS as an investment option for retirement, especially, and how it scores over the other options of insurance-related pension schemes, as well as mutual funds as well. So you've already listed out all of those as well. Let's quickly just tell all our viewers who have still not started investing in NPS on how they can actually go ahead and do that. Where can they invest from? If you could just simplify for them to get started on it, then they can quickly, after watching this show, get onto that as well.
So I think it's as easy as opening a bank account, actually. So you could even approach your bank. So a lot of banks offer NPS. So you could even approach your banker and ask them to open an NPS account for you. There are two tier 1 and tier 2 accounts. So tier 1 is where you have the option of investing for your retirement. I would say start off small, start off with even an SIP, a monthly investment that you can do. You can do as low as 1,000 rupees. So start off with 1,000 rupees, do it maybe for 6 months and then see how it's going for you. You will, as you go along, of course, learn about the product. There are nitty-gritties. You will have to choose the fund manager. So you will have to choose which, say, fund house, so to speak. So you can choose between, say, Kotak, ICICI, SBI, HDFC, all of these as options. You can choose how much equity do you want. I think that's something that you can choose to. The younger you are, of course, higher equity because you do have that time frame. But since this is for your retirement, and I'm hoping you have at least 5 years, choose higher equity, the highest equity that is possible for you, so that you can make the most of it.
Absolutely. Could you also share with us what kind of returns can one expect while investing here? Because then they will be able to easily access this investment idea, versus the other options that they must be already exploring, like an FD or traditional forms of investing. If you could help us understand what kind of returns do we generally get on investing in NPS?
So over the years, we've seen returns close to 11.5%, 12% even. But I would say go conservative, assume even a 9% return, it's still higher than any product that you're getting out there. You save on costs here versus a mutual fund. So even your direct mutual funds, NPS is cheaper than that. So I think you can opt for something like an NPS, even when you're looking at cost. And remember, each sort of paisa adds to the return. NPS is definitely something that you should look at.
Absolutely. So NPS definitely the go-to option for your retirement planning. You've heard, Shweta, on the parameters on which NPS really scores over the other forms of investing. So definitely, and how easy is it to go and get your NPS investment started? And it can actually be on a SIP format as well. As low as 1,000 rupees is what you can start off with. So very little capital you need to invest in, and you can definitely expect higher returns than the other traditional forms of investment that you do, like fixed deposits and savings deposits as well. Thanks a lot, Shweta, for sharing with all our viewers all these insights about NPS and helping them really understand what this current debate is all about and how they should wisely go ahead and choose this option for their retirement. Thanks a lot.
Thank you for having me.
If you like the video, do like, comment, share and subscribe.